The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Last trading day of the year, last Tiger Technician show of 2025. Yep, it's been a pretty good year. And now what we're looking at is how does the rotation into different sectors, this was my, the theme that I was talking about when I did my webinar a week or so ago. This is going to be a very important moment, and I'll explain just why in a few moments. Let's just run the numbers. Here's Bitcoin. Bitcoin is up $485 at 88,745. It's just stuck in a range, and it's gone from this H pattern to a peak D, a very small low bar to a high bar. I said this is just not what you want to see. The whole move from 80,750 to the high that was made on the 9th of December at 95,404, that should have been almost like a peak A or a B. And then you should have gone higher, not a D. D says there's just no strength here at all. But at the same time, you've plunged from 127,750 down to 80,750, almost in a straight line over about 7 weeks. And this is the best you've got, but at the same time, it hasn't gone further. So a great deal of damage. Now look at this simple trend line that I've drawn right here. Let me just get rid of these things that we don't need anymore. This is the H pattern. This is, the cup pattern that goes cup and handle. Don't need it anymore. So have a look at this. You had your resistance trend line, Chapman wave inside wedge dash green target resistance line. And now you come back to the inside track propellant zone. Well, so far it's a propellant zone. The moment you start trading under 80,000 becomes a repellent zone, the whole 88 to 90,000 area. Well, that's the monthly chart. The weekly chart has this pattern that could become an H pattern. So what is the H pattern? Where did it go? Right here. H pattern is where price comes down sharply and then rallies, fails at a peak A or a B, and then comes back and retests the left side low. If it takes it out, that's a very negative thing. So this is the pattern itself. It looks like this. Straight down, arches over, fails, and if it takes out that left side low, that's very, very negative. Here's the other pattern where I've taken the H and I've reversed it, so it becomes a reverse Y. If you take out the left side high, how much further you go above that is really important. It's the inverse of this. Well, look at it. Yeah. That became the double top, 127,750. Comes down sharply. So I'm looking at this pattern. There's the H pattern, successful so far. Never took out the left side low. But now look what you're doing. You're going into the rectangle formation. Invariably, the rectangle formation can last a lot longer than your patience. So I'm watching it closely. Bitcoin closes above 92,300. Anytime in the next week and a half, very positive. Close below 84,800, not good. All right, I'm going through the throat thing again. All right, let's go on to, now we go back to our, let me just run these again. It's down 100 points. I'm considering there's the reverse Y pattern. So these patterns just repeat over and over and over. Look, reverse Y pattern right there. You did it once, you did it twice, you did it 3 times. That time you've made a peak C1, C2, double top in the Dow, and I'm anticipating, and now I'm going to bring this up, that we're looking at Chapman Wave Dark News cloud cover using the Dow daily chart, identifying internal highs and residual highs and internal lows and residual lows. Internal high, residual high. internal low, no residual low, it just went powering up. And I said, here's an internal high. I'm suspecting that this on the right side is going to be a residual high, either just under, right on, or just above the previous high. I don't think we're getting to this trend line for a little while to come. Maybe in January we can start going towards it. I think we've now made at least, this is not using the dark news cloud cover. Am I going to go through this the whole show? I hope not. It's not using the cloud cover because I don't have any bad news. There's no rates not skyrocketing. There's no impeachment yet. All those things that we had over the years, right? So all I'm looking at here is a technical digestive pattern. That's kind of what I'm looking at right now. And it's not the usual where there's bad news, but there is some hints of consolidation going on. All right, let's get out of that and say that if the Dow takes out in the next week or two 47,849, you got to be careful. It's going to last more than a week or two, longer. That is going into early 2026. The 9-period moving average is still very positive. Weekly chart is still great. All right, quickly. S&P made an all-time high, went to a peak D. Peak D is where other things can happen. Therefore, we've got to look at what support levels are there. Well, we're down 16 at 68.79. There's that gap. I didn't understand the rally this morning at all. I was watching it. I actually didn't trade it because I just didn't believe it, even though my technicals, look at this. I mean, what beautiful technicals. I'll go to the 2-minute chart. Look at the 2-minute chart. From 5:16 this morning, it went green, and that was at, let's go to the high of that bar. Let's go right there. Let's go to 69.26, right? From 69.26, it went all the way to 9:30 this morning at 69.47. That the high was, in fact, 69.51.50. That was another peak D. But look at that green. What a beautiful technique. I spent time on this in my webinar that I did just recently on the technical tools, as well as what we're looking for and what positions we are looking for coming into 2026 and the first part of 2026. All right. So here's your dreaded H pattern. We've taken out that left side low. You have 2 bars in which to close above it. We'll watch that closely. All right, we'll be back in a moment to that. Let's just go back to our charts. QQQ, look what happened. There's a Chapman falling axe. Look, there's the dreaded H in the weekly chart, but so far it's very mild. There's no dreaded H. It's just an H pattern potential. But look at this. You've got the arch formation going to an M. So when this lowercase h rallies, hasn't gone back to the low, but it rallies again, be careful, because if it makes another arch formation and then fails, that becomes quite vulnerable. At this point, it's just a work in progress, and all I can say is I'm looking at this and say at 617.83, the QQQ Index 100 trading vehicle, if it starts to trade at 612 in the next couple of days, that's going to be negative. It needs to try again for the 625 area. I'll be right back in a moment. Dow's down 140, S&P's down 15. Mild consolidation going on.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
All right, so the IWM, the Russell 2000, down $1.19 at 246.84, did great. Now, this is going to be a big question for me. It made an all-time high at 258.20 earlier in December, and I did not want to really have this as an alternate count because A, B, C, D, E, F, that's the starting point right there. At 231.47. So he took it out. So technically, this should be a B. I can call it an alternate count, but there's no need to. We're long. We've had some nice gains. I haven't done very much about it. In fact, we haven't even taken much out at all. And I'm watching this very closely, giving it maybe just another day, and I'm going to raise the stop so that we don't take a loss at all, because this is just a pattern. There's the dreaded H, and it's taking out the left side low. Look at the low of the 17th of December was 246.70. The low today is 246.75. It's almost certainly going to take it out. How it handles it within 2 bars going back above that is going to be important. But the 9-period moving average today, the day is young. We're not even an hour into the first part of the session. So this S could disappear back to green, but this means that the 9-period moving average for the first time since it broke above back on the 26th of November has gone back to pink. The MACD is weak. The retro strength is weak. On-balance volume is weak. Stochastic is really weak. Getting close to the buy level is at 26%. If it goes down to the teens, we're going to watch it closely. So this is a little disappointment in that having made a new all-time high, having gone to a peak F in the weekly chart, that says, all right, you got to be a little careful. And the technicals there are also starting to weaken, but that 9 is so strong over the 14. It either says you've got a lot more room to go down, or you're going to hold very well. We'll watch it closely. And the monthly chart is in leg B. I do want to go to SMHs because that's important. SMHs are just down a little bit, 65 cents, 362.69, made an all-time high. There I could use an alternate count, G/C at the 375.59, high of around about the 8th of December. And the weekly chart is still holding well. It's really important that the Van Eck semiconductor ETF holds well all the way through, I'd say, the second week of January, that it doesn't take out 350. It's a 369, make it 355. 355, it's a 362.72 right now. I want to go to the, just real quickly, crude oil. I didn't do that earlier on. Crude oil is up 22 cents. I'm watching crude oil. It's just stuck in a range. It's not doing anything, but it might in the next few weeks if anything happens in the Mideast or in Russia, whatever it is, that impacts crude oil. Now, look at this. This is going to be very important. We've got gold. It's come back a little bit from the earlier low that was made down at the 42.84 level. It's at 43.46, down 39. But look what it did. It had this huge move, 4,584.0, a round number high. Peak E with a Chapman wave 2-bar reversal at the top. Comes way down. The 9-period moving average has turned down, and for the first time, the black 14-period moving average is weakening a little bit. So I'm watching this, but that 9 is still way over the 14. That either says you've got a lot of room to go down, or that it's going to get to the inside track propellant zone, which is between 42.65 and, well, it's a rising trend line, but right now, and 42.34. It goes under 42.30. That's a real problem. So what have we got? Remember the H pattern that we're looking at, the reverse Y, I'm sorry. Well, 44.34.60 was the high. I got to check these because it gets smoothed out. Yeah, 44.34.6, 44.30. Okay, that's it. So that high that was made the week of 24th of October, we went higher. We went to 45.84. It's quite a bit higher, but look at this. It didn't hold for more than one bar, and now we're back below it. So I'm watching this as a failure pattern. Most importantly, let's go to the GDX, and I'll see what I'm looking at. I'm looking at the dreaded H pattern where we've gone up. We've gone to a leg A, which is probably today going to be a peak A, gray A, because it's a retracement. And look at this. If we take out the 84.89 low that was made 3 sessions ago, that's going to be the dreaded H. And then it says the next level of support is down at 83.75. All right. With that said, let's go to the silver SI. Okay, silver continuous contract. Also, it didn't even make an H pattern. It just made lower lows, same as the gold. It's the GDX that did it. Let's see what the SIL did. Have I updated this? Yeah, SIL did the dreaded H right there. Rallies up and arches over. We're going to be watching it. That's the Global X Silver Miners ETF. If the today's what? Wednesday, Friday's a session. Let's go into Monday, Tuesday. Let's just say by Wednesday, today's Wednesday, a week from today. If a week from today, the SIL, that's the Global X Silver Miners ETF, has taken out the low of the 19th, which was at 82.24, we've got time and price for this consolidation in the gold and silver area. Platinum had a huge move, went to this peak F. I don't think that's F/C. I think that's going to be F. And we've plunged to a low. We've gone from 25.84 area to the low today of 1927. 1927. What was the book that I loved? I've got it right here, haven't I? Oh, I can't. Yeah, Bryson, American, 1927. That was the book by Bryson. It's a really interesting book, and I use it as for my platform for my keyboard. America 1927 by Bryson. Yeah, very good book. And then they talk about the Federal Reserve. Ooh, that was also very intriguing. All right, so platinum's pulling back. Let's see what high-grade copper is doing. High-grade copper is pulling back. It's actually holding pretty well considering, but it is in a leg D. below the previous D. I don't like that. Usually it says, oops, you're going to slide. So I'm watching copper at 5.65, down 12 cents. If copper goes under 5.54 in the next 3-4 sessions, that's going to be it for the moment. Now let's go to I did that TLT. The TLT trading down 9 cents at 87.77. Dreaded H, dreaded H, dreaded H, dreaded H. And he has the arching over, but it's still holding quite well. So let's see with the TBT, which is the inversion. This is the yield itself at 34.42, 3.442. That is the 20-year. It's not really 20. It could be 30 or 40, but it's called the Ultra Short Lehman 20-year T-bond ETF. The green 9-period moving average hasn't turned pink. It almost did, but it hasn't. So it says it could rebound a little bit. That's the yields. So far, the 9-period moving average in the weekly chart has crossed positive. It did last week on Friday. Cough, cough. And today it's green again. So I'm just watching this. And as I said, if there are jobs, that means that there's work out there. That means people are making money. That means also that companies are probably looking to invest in their businesses. Therefore, they're going to pay a little bit more for loans. Why shouldn't they? I actually just see yields as a non-issue at this particular point. It's a big issue in the real estate market, but it's other things are there. Look at this. There's Toll Brothers down another 55 cents today, 136. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foresight Fund Services, LLC.
Hi, folks. So we've got the Dow down 134, S&P's down 14, and I think, as I said to subscribers this morning, I think this is a technical overbought situation. I don't see any bad news at this particular time that I can consider to be dark news. It's just overwhelming the market. It's just a purely technical pullback. Now, I've got a couple of questions. Let me get to them. But first, FXI. Always like to do that. That's the China large cap. There's the dreaded H. And the H can go to a lowercase H, can go to a lowercase m. If it takes out the left side low, be careful, because it means that you are starting to make lower highs and lower lows. That's the weekly chart. And today's down 40 cents to 38.27. My target is 37.58. That's the 200-period exponential moving average, the daily, and we'll see what happens there. If we can move at any point in the FXI going to the end of January over 40.80, let's call it 41. If it can go over 41, it's not a big deal, but so far it's been a big deal. It shouldn't be. That would be very positive, but that's not the case right now. Okay, now a question came in. Let's see. Basil, if you could look at HG. So you're not looking at HG, which is at HG Copper. You're looking at HG, which is the stock, which I've mentioned a number of times to subscribers of Opening Call. This is Hamilton Insurance Group, personal and commercial insurance, plus cyber. And they partner with Travelers, Progressive, CNA companies. I like the chart very much. It just 5-6 sessions ago, it was at an all-time high, but it's at 27.90, up 2 cents today. It's a leg D in the monthly. It came out as an IPO back in 2023 in the teens. It pulled back to about 12, and then it ran up peak A, peak B, C. It's in leg D in the monthly chart. This is an IPO, considering that this is the first time it's ever gone to a D in its life. That's really important. Now, what's interesting is in the weekly chart, I considered, because the 9 was so strong above the 14, and there's a huge leg up from the week of from the 22 level, 22.66 was the low. The week of the 7th of November, I considered this was actually a brand new buy signal that's gone to a buy mode. It's in leg B in the weekly chart. Earnings come out in February, so we don't have to worry about that. The stochastic's flat at 91. On-balance volume was a little bit overbought. MACD's good. Retro strength is good. It's just pulling back a little bit, but it's still good. And the 9 is way over the 14. Price is way over the 9, the weekly. It's at a peak E in the daily chart. What was the question, Basil? If you can look at HG. Oh, I'm in at 28.11. And it's trading at 27.90. So this is what I would do. First of all, I'd grab this. Let's just treat this as if it was Technical Friday with the Chapman methodology. I grab the 2 outer bars right there, and it's snuck above it briefly, but it's in a rectangle formation. The reason why I haven't technically said to have it as a buy right now for the subscribers is that we're watching it closely. The way it's holding steady like this says that if it was to break and close under 27.30, that's only 60 cents lower, then you got a little bit more time. But I like it very much. Now, all I'm going to say is, if this is your first entry point and you want to add to it, that's one thing. But if this is the buy that you've got, I'd be a little careful, only in that sideways can go, my rule of thumb, a rectangle formation can last a lot longer than your patience. So that's fine. You don't mind that. As long as it holds, I'm going to give it a little room under that low of 27.45. I'm going to say the whole area of 27. If you're in at 28, you've got to give it as a starter position at an all-time high, at least a point. Give it a point. So let's start off with that. You're going to give it a point of support, and I still wouldn't get out of the whole thing because I do like it. If this is only a B in the weekly chart, and I can't say I feel 90% confident that it's still just a B, not an alternate count G. Then I expect higher highs to come in 2026. In fact, 32 to 33 would be my target. If there was a measured move to the upside. So I'm just saying, stay with this trade. I'm going to be following it closely. We haven't gone in officially, but you have liked it, and you're in. I don't know if that's the coincidence here, but I'm just saying I do like it, and I think it's going to go higher. And the insurance area, if you look at KIE, which is the insurance ETF, made a peak D just recently, but it's taken 6 sessions. It's just pulled back a little bit. It's a peak D in the weekly chart, and it's a double C in the monthly chart. It can have an overlapping wave. Well, I don't want to go there just yet. But in the meantime, if the SPIDER S&P Insurance ETF SPIDER fund goes over 62.47, 1 penny above it, that'll be D, and that'll be really important. It's got almost like an overlapping wave. I like that. So the insurance area has been very good. It's only pulling back. It's really a mini digestive moment right now. I like that. What was the other one? Because we using, okay. Oh, Iran. So this is going to be interesting. The more I thought about it over the weekend, the more I thought, okay, Iran, we've had absolutely fantastic gains. We went in from 22, we ran it all the way up to 76.87. On the way up, we took profits, and we have a little bit left, and we tried to add the other day. Didn't work out. I'm holding off. But the way it's acting is saying to me that there's a really good chance it needs about another 6 weeks or so of consolidating. But this is in the next generation data centers, renewable energy, GPUs. I think by late January, February, if it can hold the 200-period moving average of 32, it's a 38, 31. I'm not saying it's going to 32. I hope it doesn't, because I kind of like the way it's acting right now. If it's able to trade between 44 and say 36, if sometime in January it's starting to move into the 48, 50 area, that'll be the turnaround that says, okay, it's getting ready for another big move up. It's one of the few in the area that's making money. It's had a huge hit from 76 down to 33. That's cut in half. I'm just saying to you, I do like it, but if you're in, did you tell me the price that you're in at? At 41.50, it's straight. 41.50. Yeah, 41.50. 38.28 is certainly it's a big percentage pullback, but this one I'm going to say to you, at least part of your position. Today's low is 37.56. I would have 36 is 5 points, 11 so percent. When this really moves to the upside, it'll more than make up any money. So I'm prepared to say, take it. Be prepared to take a little bit of a loss. You don't want to sit with it from 38 down to 32. So I'm going to say, at least on some part of your position over the next 3-4 days, make 36.50. If you don't want to go that low, you can go to 37. Today's low is 37.56. Make that a stop on part of your position, because there's no sign yet of a positive action. If this W formation by Tuesday, we're looking at it at 40.30 to 41.30. That's the W formation you're looking for in the daily chart. So I hope that helps you, but it'll be back in fashion, but maybe not right now. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So a question came in, what exactly do you mean by C1, C2? Look, here it is in the 1-minute chart of the E-mini. It goes peak A, pulls back, peak, right? Doesn't take out the left side low, goes higher, peak B. Then it goes to 6929.00. That's your peak C, pulls back, and it retests at what? 6929.00. That becomes a peak C1, and it acts like a D, especially since the MACD was good. There was a little bump in the on-balance volume, so I have learned to take that double top. There's a peak C1, C2, saying it could have been a D. It acts like a D. I'm treating it as a D. Be careful. Take some profits and raise your stop on any other position that you have. And look, there it is. Does it test the H pattern? Does it test the left side low? Does it get there, or does it start running right now? That's the next question, right? So I just wanted to show you live. Okay, next thing I had a question about was, let's go in order here. So TGB is Taseko Mines. It had a spectacular move. It's gone almost 1-to-1 to the measured move that I had. I drew it in just recently, and I said, what did I say? 5.98 was a potential target if I took, let me open this up so you can see it properly. If I took this move right here and I added to the high of that peak D, I get a 1-to-1. I've done this a lot over the years, and I find that it's one of the techniques. For some reason, it's a measured move based on my own criteria. It's different to Fibonacci and other techniques. So and what did we do? We went right here to 592. Was that the level that I was looking at? Yeah, right there. 590. Well, a little hard to say. 598 really. So it just missed it, but it did go there. And now I'm looking at, because the 9 is still very strong. But look at this. This is copper, and high-grade copper is pulling back in this huge rectangle. Rectangle formations are just amazing, the way you always try to get back to the high. So copper is within the range and now starting to weaken a little bit. I'm just going to say, on a very short term, I've got TGB. I'm going to have to make a change and remember, in the Chapman methodology, the idea is to try to be as accurate as you can in your notation, because whatever happened before doesn't matter. It's what's happening now. Otherwise, you're going to say to yourself, I'm looking at something and it's wrong. So I'm taking away these arrows and I'm saying DEF, and that goes to a G. I've got a G/C. The 9-period moving average never went down enough when we put the down arrow in. That was premature. It's holding very nicely at 573. I'm just going to say, I've got this as an alternate count, which said if it goes to a higher high, call that a D. And that's exactly what we've got in the weekly chart. And I've got an F in the monthly chart. So to Seiko Mines, trading at $5.73, up 8 cents right now. Good action. I'm just going to do this right now to show you what I'd be looking at, resistance and support levels right there. So if in the next week it does one thing, that's going to be important. But in the very short term, if it takes out 592, that gives you the D that was missing. And it says just be a little careful. It's fantastic action, but just be a little careful. There's nothing else to do. But if it drops under 550, which is the 14-period moving average in the daily chart, I'm looking at this as another dreaded H pattern, which is what you're seeing in some of the commodities. So just be a little careful here. I love the action. Unfortunately, I have not put it into the newsletter. I've put it in almost every week. I've got it, and I show it when we talk of my Friday afternoon video. Hour to an hour and a half video. I always talk about it, and yet we never got in. I mean, just dumb. There's no reason why the 9-period moving average, everything was positive. Just there were other things we were looking at. So I like it. It's extended, but that doesn't mean to say it has to go down. I'm telling you the levels to watch. And if you're in it, usually I'd say, oh, it's done so well, take a little bit off, but I think you've already taken a little bit off. So at this particular point, I just monitor it because if it takes out 3 days ago, the low was 552, then it's probably going to go down towards the 550 and then 540 level. But it's holding very well. Those are just parameters. Looking out, weekly, monthly, it's still fabulous. It looks really good. Okay, I hope that helps you. And Happy New Year to you, Dan. Okay, next question I had was, where did it go? Do you have time to go through some of the Mag 5? Okay, so let's just do this. Apple, look at this. Peak E, major top in the daily chart. It's in a sell mode. It goes, I didn't even type it in. It goes to 288.62. I remember looking for round numbers. I saw one at the open the day before at 283. That was a warning for me, but we don't have anything to do with Apple. And years ago, should have just bought it and said, hey, go to sleep. But anyway, it's pulled back very sharply. And this is what I'm talking about, this rotation that's going on. Look at this rotation. Apple. Well, wait a minute. General Motors, completely different area, makes an all-time high at 83.68 on the 22nd. It's pulled back just a little bit right now. The weekly chart is fantastic. Let's go to Microsoft. We own Microsoft down from the 338 level, got a little bit left, but we've taken lots of profits off. It hit 55.45. We've had other trades in between, and I've done nothing with it because it's in the arch that goes to an M-shaped pattern, and it's in a rectangle. So it's just doing nothing. In the next month, if Apple closes under 460, that's a big problem. If it closes over 488, touches 500, that's the first sign that I'd be looking at that the weekly chart finally could see the 9-period moving average turn positive. Meta, M-E-T-A, there we go. Meta trading off the all-time high that was made back at just under 800. It was at 796.25 back in mid-August. It's pulled back, doing nothing. It's still in the upper range of its biggest move, but it's really taking its time. It's A, B. It just keeps there's a peak D. It's pulling back. It's stuck on the 200-period moving average of 667. Look at Alcoa, another one we have. What a difference. Almost an all-time high. 557.61 was the all-time high back in January 2023. The recent high was 54.46. It's down today. I want to add to our long positions in these different sectors that have done extremely well. And let's go to Google. I use Google. I don't go to the GOOGL, which is Alphabet's trading vehicle. I just go to the main one. 328.67 was the high on the 25th of November. A nice Thanksgiving present. And then whoosh, comes down, just consolidating in the higher level. This is what I'm talking about, the rotation. Within the rotation, you've got some that are doing well and some that are doing quite poorly. Microsoft's the poor one. Google's one of the better ones. What am I missing here? Netflix, NFLX. Whoa! Netflix has gone from the 134 area. What was the high? Didn't I type that in? Oh, I had to redo it and I didn't. Right there, 134. Oh, I remember this, 134.12. And we're looking at, what is I looking at? And I spoke about it. And then it had this huge red candle. So that was the high. And here it is trading at 93.56. Another one that's kind of really, this is a problem. And I've got it as a target of this left side. Oh, I'll do this when we get back. Netflix. Woo. Yeah, Netflix going to test the levels of 83 at some point. I'll be back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
What a pity. I love to do these live, but I had these questions come in, so I didn't finish my sentence here talking about this arch formation in the 1-minute chart, peak C1, C2 double top. Well, it did take out in a measured move to the right side. It took out the right side low. The S&P now is down, futures down 26.51. So Netflix, I have a target of, whoops, wrong one. Let me just quickly go there. Netflix, there we go. Netflix, I have a target of the 82s. Now, the question about RIG, it's been holding in, this is Transocean Limited. I would not be surprised if this is one of those stocks that you hold and hold, and then you say, oh, I'm giving up. The moment you give it up, it actually starts to move. Why? because it has a 200-period moving average of 447, which is acting like a magnet. It didn't get there forever. Finally, it got there. It held for 2 weeks, and now it's pulled back, but the 9 is over the 14. I was going to say to you, the question asked about is how's it holding? It keeps getting negative news, and yet it's holding pretty well. I think this is one of those that so far is doing what you would like to see for a stock that is a very low priced in the oil area, Transocean Limited, oil rigs. I like it. It's at 414. The 9-period, if the 9-period moving average crosses positive next week, I think you could start to move to the 430, 435, and then it just goes sideways until click, that magnet of 447 just drags the price up. The most important thing is if it closes under 383 in the next 5 days, that's going to be the H pattern. But so far it's doing well. So I'm going to say Happy New Year. Thanks to everyone who listens to TFNN. Thanks to everyone who listens to my show. We all appreciate you at TFNN. It's just fantastic to have you as an audience. You're a great audience, and good questions come in. And let's hope we can have another good year coming into 2026. And with that, I'm going to be signing off and saying thank you very much for everything. And thank you to Tommy O'Brien for holding the show together so well, doing a great job. And we all miss Tom, his father, late father. I mean, we all have wonderful, wonderful memories of Tom. And to TFNL, my engineer, keeping me on track. Thank you very much. And I'll be back just for the news, and then I'm out. Have a wonderful New Year's.